So when I look at Bitcoin, Bitcoin has continued to chop sideways over the last couple days, ever since it tested the 28,500 resistance. And by the way, why is that resistance? All right, because it is the lowest point. Check this out, guys. 28,500, which is the high that we just hit over the last couple days. It is the low pivot of the mid-bull cycle of 2021.
Today we have master trader Gareth Soloway giving us his Bitcoin prediction and where he sees the crypto market headed in the coming weeks. Soloway points out that Bitcoin has been trading sideways since it hit a resistance of 28,500, which is significant as it is the low pivot of the mid-bull cycle of 2021. Soloway believes that if Bitcoin rallies above 28.5, the next level to watch for is 30,000. He also shows a scenario where we'll see Bitcoin bottoming out at 9 to 10,000 if the $15,000 low is broken. Soloway shows us his current short position and where he expects the crypto market's next move to be. He'll also discuss the Fed's next rate hike and the unpredictable nature of the banking collapse we're seeing now. Let's check out the latest interview with Gareth Soloway. If you enjoy the content we do here on this channel, don't forget to like and subscribe. Let's get right into the video.
So what we know is we're at a pivotal level going into this Fed announcement. If we see a pop on Bitcoin, there's a major level right up here. This is the big one at 30,000, even numbers. If you're a technician and you know charting, you know that even numbers matter in charts because they matter to our human psyche. Naturally, up here, guys, up here in our brains, we are drawn to even numbers. All right, we don't talk about 23,752.5. We talk about 50,000. We talk about 100,000. We talk about 30,000. We talk about a million. These even numbers on a statistical basis hold weight. So if we see a rally above 28.5, your next resistance is going to be a pierce of 30,000. For me, I'm going to be looking to inch in some more on the short side of Bitcoin. I'm in the camp that I play probabilities. Doesn't mean Bitcoin can't break 30,000. Let's keep that in mind. It just means that probabilities are the way I position myself. So I started a little bit of a short position at 28,450, right around 28.5, and I'll add to it at 30 and change, a pierce of 30. Now, if we establish ourselves above 30,000 and we stay above for like 7 days or so, and I'm looking for not just a pierce, a close above doesn't mean anything. I want to see a close above. That would be significant to me. The chart has to prove it to me before I believe it. All right. So again, a lot of you guys I'm seeing messaging, asking, when could we see 12 to 13,000? I'm looking at 2 to 3 months out if this 30,000 line gets rejected and we see price start coming back in. All right. So 2 to 3 months out, 12 to 13,000, and then likely 6 to 8 months out before we could see that 9,000, 10,000 target if it does. Basically, if we break that 15,000 low, then I actually do think 9,000 is the likely culprit here. Now, I'm pumped because today is a massively important day. All right, we have the Federal Reserve announcement at 2 p.m. Eastern time, followed by the key, and this is the big one, the key press conference. Now, you might say, well, why is the press conference more important than the rate hike or lack thereof? The answer is because that is the guidance that the markets will cue off of. Right now, the markets are pricing in about an 85% chance of a 25 basis point rate hike. I think that's exactly what they're going to do. I'm going to explain real quickly, give you guys the rundown of why you're likely going to see 25 basis points. Okay, go back, rewind. 2 weeks. 2 weeks ago today, Jerome Powell was in front of Congress. We had just gotten out data that was inflationary, and he basically said to Congress, listen, we may have to go 50 basis points. After that, we saw the banking markets collapse, right? We saw the banks like Credit Suisse, SVB, SBNY, all of these banks collapse. Stock prices of all these banks collapsing as well. I mean, take a look at FRC recently, down huge from the all-time or even 52-week highs. So the bottom line is that the Fed was put in a pickle here. They don't want to go to zero right now because there still is, number one, inflation. Number two, if they go to zero, right? If they go to zero interest rates, the markets are going to cue off of that things are a lot worse in the banking sector, that things are very, very chaotic, that there's a potential catastrophic black swan event coming. And so ultimately, what the Fed will do is probably thread the needle with a 25 basis point. This way, they don't really raise much, but they raised just enough to kind of keep confidence that they're in control and that we're not looking at a major banking collapse that's even greater than what we've done.
Soloway discusses the potential impact of the Federal Reserve's announcement on the market. He predicts that the Fed will thread the needle with a 25 basis point hike to keep confidence that they are in control, and then pause until more data comes out. Soloway also suggests that the recent collapse of banking stocks is due to concerns about the potential for a catastrophic and unpredictable event that's just around the corner.
But I'm looking for a 25 basis point hike and then a kind of pause. So we could be looking at not a pivot. A pivot technically would be dropping rates, but I think after the hike today, you're looking at a pause until more data comes out and more stability in the banking market. Here's your chart on gold. Basically, what we see on gold is that the consolidation is continuing. So basically from 2020, from the COVID dip and then the reversal to the upside where we made this high just north of $2,000 at 2075, you have been sideways chopping. All right. All of you, if you're new, maybe not. If you've been around me for a little while, you know this pattern formation. This is a classic bull consolidation pattern, right? So if we go out and we look at the chart here, gold's been in an uptrend up until that point, and then it's been in a side trend. You want to see something crazy? Go back to the 1970s. All right, look at this same exact pattern formation. All right, here it is. The 1970s, you had 2 to 3 years up, like we had 2 to 3 years from 2017 to 2020. Then you had consolidation pullback, and then look at the run that gold experienced. To me, this is telling me the future. This chart, which is historic, is telling me the likely probability of what is going to come on gold. Now, do I think it's going to do a 9x? I don't think so, right? 9x seems a little outlandish to me on gold, which is what it did back in the 70s. But is it possible that we could get a 3x? Could we see $5,000 an ounce in 2 to 3 years on gold? Maybe 6,000? I do think so. And again, one of the things you have to note is look at the strength in gold. All right. Recently, the strength in gold is telling you institutions are buying. Right now, one of the things, and I said this in interviews recently. I said it to my members at InTheMoneyStocks.com at Verified Investing Crypto. When you told me, and this was one of my key points to David Lynn, even when he was at Kitco News, is that basically one of the things that I queued off of last year, even though gold did not have a stellar year, the dollar was up 20%, 20%, and gold was basically flat to negative on the year. That should not happen. All right, in a perfect world where things are equal, if the dollar's up 20%, gold should be down 20%-ish. All right, the fact that you saw gold holding steady, that was barely down on the year, that's telling you big money is buying in. Big money. And we know central banks are buying in. We know that the big money banks are buying in. So what that tells me is that gold continues to be one of my favorite assets for the remainder of this year. Do I think eventually Bitcoin will be my favorite? Yes. You guys know I'm a long-term huge bull on Bitcoin. I just don't trust the rally just yet because, again, probabilities are how I analyze everything that I do. All right, so in terms of resistance, if we go up to the 2075 level, that is now a triple top. Technical analysis tells us that when you have a double top, you're likely to pull back big. So here's your double top. Let's talk technicals here. I want to do some teaching. All right, so let's go into here. Let's see what we got here. Bear with me as I do this. All right, here was your high pivot on gold. Here was your double top. Double tops, you get big pullbacks. All right, now remember this because it will be useful in your future analysis. So here's your pullback off your first high. Here's your double top. Here's your pullback. What technical analysis tells us is that if we hit that level again, you'll only get a small retrace. You'll get a little bit of a retrace like this, much smaller, and then the breakout likely takes hold. So that's what I'm expecting. I think within the next month or so, we likely hit that triple top, and then we see a pullback, a very small pullback, a check back. Essentially, you're going to get sellers there. People are going to say, oh, it's at resistance again. Let me sell. Smart money's going to buy that pullback, and it's going to blast off to the races.
Despite gold's current price, Soloway believes that it's been in a consolidation pattern since 2020 and sees it as a favorable asset for the remainder of the year. However, Soloway believes that Bitcoin will eventually become their preferred asset, noting that it has the potential for significant price increases. His technical analysis suggests that Bitcoin could potentially rally above 30,000 if it breaks 28.5, and based on chart signals, Soloway emphasizes the importance of waiting for significant moves before making any decisions. With Bitcoin's potential for significant growth, it will be interesting to see how the cryptocurrency market develops in the coming months. What do you think about Gareth Soloway's Bitcoin prediction and where the market will land in the next few weeks? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.